It's the weekend, and this is some of the stuff that I just see on YouTube. And it's like, okay, please, 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 if you are trying to start out, don't get caught in the headlines. Like every time, it works every time. Like nothing works every time. Like that is just something that, like, it just grabs your attention because you want it to be true. Nothing works every time. And so I don't know Jeremy Cash Young. I think I might have watched a few of his videos. I have I don't doubt he could trade. Maybe he can, maybe he can. I have no idea. But I figured we're gonna go ahead and watch this video. It'll be the first time I've watched it. But if you're new to trading and you're trying to learn, be careful about titles like this. Works every time. Nothing works every time. And in fact, if it worked every time, why are you even on YouTube? Like, just trade like that. Just make money. And then the other thing, like, okay, it works every time. If you look at the thumbnail, there is a red. Like, there's a lot of blue on there, which looks appealing, especially if you've been trading and you've used MetaTrader, then blue is profit, red is not. And so there's one red on there. So what happened with that one? That didn't work that time? Well, then it can't work every time. So I'm curious to see what this one Forex trick is, the key to financial freedom. Is this one Forex trick the key to financial freedom? I'm hoping it's either discipline, consistency, psychology, or risk management. If it's not one of those, I don't know. We'll have to see. So let's go ahead and take a look. Probably have to watch an ad just because that's what happens. Yep, there's an ad.
And if you want to build and launch your own Android, iOS, or web app without any technical skills, then I have great news for you.
Thanks.
I'm going to be doing.
Okay.
The key to making really good money in these markets is back testing. You learn how to back test, you'll find so many different opportunities to capitalize and make a lot of bread, but you don't be back testing. So we're going to fix that today. But before we even get into that, I got to give you a scripture today, right? James.
Okay. Back testing is good. It's a way for you to get in there and test the concept, test the idea, whatever it is you're trying to trade. There's I would say there's a very, very few select strategies you probably couldn't back test, just because if you're looking for like hesitations within the market, unless you actually have tick data, you can't do that back testing like in some stuff like TradingView, because it doesn't have the tick data that you need in order to be able to do, like, if you're actually watching price movement and fluctuate. If you're waiting for candle closures, if you're looking for things like that, then absolutely backtesting will definitely work for you. And most strategies are like that. So don't like take that as a, oh no, no, okay. Most strategies are like that. Most strategies, you're waiting for some sort of candle closure. You're waiting for some sort of set of candles to let you know what the market's getting ready to do. That are using multi-time frame analysis in order to try to get that same feeling. But in essence, if you were on the live market, you can see some of that happen in real time, where you can't in back testing, or it would be a whole lot more work to see it in back testing. So back testing is good, and I absolutely love that we are starting off with scripture. So I'm curious to see which scripture it is. It sounded like it was going to be James. Let's see where it's going.
James 4:17. It is a sin to know what you should do and not do it. Simple as that. A lot of y'all know a lot of stuff you're supposed to do, but you just don't do it. That's a sin. You feel me? So make sure you do what you're supposed to do. Simple as that. All right, so we're going to get into this video because I want you to learn how to backtest and change the game, change the trading game forever. So let's go. This is how I came up with the one candlestick. Let me show you. When you backtesting, that means you looking back, you analyzing a chart. Now I'm on XRP. For those of you who have not been getting it popping on this XRP on the Forex side, you've been missing out on bread. But when you back testing, all right, you looking at the market, you seeing different patterns, you seeing what's happened before, and does that continue to happen all throughout the chart? Now there's a certain amount of things that happens all the time, and once you're able to start to see
So he is right on that one. That is one of the main points of backtesting, to see if something's happened enough in the past that you can have a high set of confidence that it's going to continue happening in the future. So things like patterns, whether it's double tops, double bottoms, engulfing candles, things of that nature, you can go in the back testing session and you can see how often those things happen. And you can get a sense of understanding of what that is going to look like in the live market. Now, everything's not a one for one. So just because it happened 10 times in the past doesn't mean it's going to happen 10 times in the future. But if you've had like, okay, I can generally get about a 60% chance of this pattern showing up in this result, that's pretty good. And then you move forward to live testing to see if that works out. I don't know if he's going to talk about back testing in regards to like, if you look at the time schedule he's looking at, I think he's on the 1 hour chart. And if you look at some of these times, okay, 2 o'clock in the morning, are you up trading at 2 o'clock in the morning? So if that candle formed at 2 o'clock in the morning and you are keeping that as part of your data, is it realistic though? So it's like, that's one thing, but once again, it's when you get into it, that's what those are some of the things that you need to flesh out. That's sort of what forward testing, live testing will do. You come into the concept or come into the back testing, see what the back testing will prove as far as the concept, and then you move forward with live testing, forward testing, not in a live as in a live account, but like in the live markets, to see if you can implement what you found out. We're a bunch of mad scientists. We're doing all of these scientific experiments. If X, Y, and Z happens, can I get A, B, and C result? Okay, cool. That happens in the history. Can we repeat it in live data? And if the answer is no, well, then we got to tweak some stuff. If the answer is yes, go forth and conquer.
See it, then you can come up with strategies, right? So this is how I came up with one candlestick strategy. Check this out.
Candlestick.
One thing I noticed about the chart is that every candle has a wick. Now, if you don't know what a wick is, it's just these small little sticks. Every candle, if you notice, you'll see wicks everywhere.
Well, okay.
All right. Even if
not every candle, because I mean, but the understand. Okay. I see he's, words matter and I try to monitor my words but I fall short too. So not every candle. I mean, you have a candle right here that does not have a wick. You have, that might be a wick, maybe not. That candle right up there that doesn't have a wick. That might be a wick. Same thing here and here and here. So it's not every candle, but he is on point. Most candles, a vast majority of candles, so much so that he feels confident enough to say every candle has a wick. Most candles have a wick. What is he going to do with that wick? I have no idea. I've traded a 2-candle theory. I'm curious to see what this 1-candle thing is. But I'm curious. I'm curious to see what this 1-candle thing is, because I've traded a 2-candle concept, and that has worked out really, really well, and I still use it to this day. So I don't know. Maybe I might learn a little something here that I might not be thinking of, and might be able to implement on my own. We'll see. Let's continue going. Clear all my drawings here, and keep it going.
if they're tiny, you got wicks. Some of them you got that's really huge. Some of them you got that's really small. You know what I'm saying? These are due to news candles, which I love these. These are news candle wicks. And then some of these just, regular price action wicks. But they're everywhere, all right?
They are everywhere.
So I was thinking to myself, like, what's causing that, right? Rejection, right? Support and resistance zones, right? That's what's causing that. As I'm looking back through the chart, and I'm like, okay, so that means that every candle I have an opportunity to make money on, every single candle, because every candle for the most part will have a wick. So if the market is pushing up and there's no wick showing, then that means it's going to eventually reject off of something and retrace back, and there's going to be a wick there. So that's an automatic win. I just got to time it right. You see what I'm saying?
Okay.
Back testing is key.
Yeah.
Because no matter what chart you look on, we'll go from
we can go here and I can just click on a random Forex pair. And you will notice wicks everywhere again. All right. So that means any pair. Now I will tell you this, when doing the one candlestick, it's best to do it on indices, NAS 100, US 30. I do it on here on regular Forex pairs, but you do have to have like a larger lot size. So, you know, just to let you know that. All right.
And one of the reasons he's talking about US 30 and the indices is because their movement is a lot. So even though it's a small wick, their movement is really big in regards to like their tick values and everything like that. So yeah, I mean, they're okay. So I wish we would have stayed on, and I hope he goes back to XRP USD within the next 11 seconds, because that one was a really, really bullish candle. And he was talking about, you know, it's like, here would be an opportunity. You just got to time it right. And it's like, okay, it's almost like super scalping, hyper scalping, but I don't want to jump too far into it, because timing in a scalping mindset is really, really key for scalpers. If you are swing trading or you are day trading, I would even use day trading into this. You're not necessarily trying to time the market perfectly. Most of our entries are going to be within an area, and we're just trying to get in there at a good price point that gives us a good ratio to that either overcome with the amount of trades that we take, that our win rate is successful, or our win to risk to reward ratio is big enough that we can overcome some other things as well. And there's a couple other ways to manage things. You can get very, very creative with risk management, trade management, things of that nature. So I hope that he goes back to that. We only have 11 seconds though, so I doubt it. We'll see.
I always do US and then 30. There we go.
Yeah, going back to US 30. Oh, look.
A lot of people ask us, what's the difference between mud water and mushroom coffee? First, we are mushroom coffee. Mushroom coffee is...
Boom. But yeah, so every candle has a wick.
Okay.
Okay.
So that one has 2
And
seconds
so
left.
You got
There's
something
no
that's
wick on that
covering.
one.
All right, like this
It's a
one
very
here.
small wick.
We got a tiny wick on this one.
Right.
But the majority, you know, we getting those retraces. So when I'm selling down, I'm taking the money because it's pulling down. You know what I'm saying? So that's what I kind of, you know, start noticing on those. So when I'm back testing, I'm looking at everything. And then what I do is, of course, I grab indicators. So let me go over here and start putting indicators on my chart. So then I'll show you how I came up with the other ones. All right, you can either use the RSI. All right, that was the NBA strategy, the never broke again strategy, or you can use stochastic. I'm just gonna use stochastic right now, just because that's what I use the most. RSI still works. Every strategy I've ever had on this channel still works, guys. You just use them for different things if you want to. Completely up to you. So I go here.
Every strategy does work. Not every strategy works for every person, though. I think it was Tori who's talked about strategies are like finding your soulmate. It's going to take some work to find that one. There's a lot of fish in the sea out there, but psychology is where it's at. So work on that.
Well, let me show you first how I came up with this. So essentially, this is still can be considered an NBA strategy. I call it 10 for the win when I'm doing binary options, but same rules apply. So overbought, oversold levels. All right. So whenever you get the market, and I'm actually come down to the M15 on this one. Let me come down to the M15. Boom. All right, so here we go. Okay, so one thing I started noticing, I said, this market here is starting to peak outside this blue line, right? This right here is the 20 level, and this is the 80 level. I'm like, okay, well, if sometimes the market goes lower than this blue line, then it has to be a different level than 20. So I start playing with the numbers, right? And I'm like, okay, it got to be a different number. So I came over here and I just started going through the numbers. I went to levels, you know, I went down to 16. I'm like, nah, I'm still going lower than that. I went down to, 6. And I'm like, okay, 6 works. Same with how I got to 92. I noticed at the 80, you see the green line going above the 80. So I'm like, okay, well, it's not rejecting at the 80, it's rejecting above the 80. So I need to find that number. And I found 92. Now you see right there at 92, we dropping. 92, dropping. 92, dropping. All right. Now this one, see, it was at the 20, but a lot of these get down here close to the 6. So you'll get some that go way lower Like this one touched right at the 6, and then we got the buy. So that's another thing that I noticed while backtesting. And this is not even me placing trades. This is just me on demo, going through the charts, just kind of figuring out what's always happening. And I'm like, okay, so that always happens. So now that's pretty much 2 strategies that I got, right? Again, if you use a TDI, you know, if you use the RSI, you can do the same thing. All right. A lot of things other people use, they start noticing, you know, a cross in the stochastic. They say, okay, every time we cross, we get some type of movement, right? When we cross here on this part of the stochastic, we got a drop. All right. So that's how I'm backtesting. I'm looking like, okay, so that happens all the time. Every time I see a cross, we get some type of good movement. All right. So those are other things you can backtest and look at. All right.
True.
I see the market starting to reject in the same areas a lot. So we got a rejection here, and in that same area, we got rejection here. So I'm saying, okay. And then if I go to the left, if I just draw this over here to the left, we got rejection here in the same spot. Okay, so now I need to start paying attention to zones and levels, support and resistance.
So there's a lot of stuff that, and I mean, he's right. You start noticing these things and you can make it your own. One of the things that I've heard Nick Shawn talk about in regards to, he was doing divergent, which is a completely another different strategy, but that was his original strategy that he got into. Maybe not like the beginning one, but it was definitely one that he was really, really good at. And he was doing it so much that he was able to tell just by looking at the chart what would have been a divergent. I don't know if it was the RSI or the stochastics. It might have been the RSI, that he was like, yeah, you know, the way that price moved here, I'm, you know, like 95% sure if you look at the RSI, it's a divergent. And sure enough, he would pull up the RSI and be like, yep, that's a divergent. And then he'd continue, you know, I think he was back testing. He was like, this is my trading style and this is how I operate it. But it's that immersion, it's that experience that has caused him to see it so much that he no longer needs the indicator to tell him where he thinks there's a divergence. He's seen it enough that he can tell by the candles and his own intuition and experience to say, yes, this is a divergence of some kind. And so indicators are great because they can help you focus on things that you want to focus on. Support and resistance, another thing he was talking about, you know, I see it bouncing off of here, bouncing off of here. Like, all of these things are for you to train your eye to see certain areas that you want to see, that you are interested in, to then take a trade. And if you decide to take a sell off of this area and there's 40 other people, there's some other traders out there that are like, yeah, but my strategy told me to take a buy. It doesn't matter, because when you win that one, he loses that one. But when he wins that one, you might have lost one. And as long as you can make more than you lose, we can all be profitable in this game, doing completely different things. The key there being is you have to find the thing that's going to work for you. So let's keep going.
And as you keep going through the chart, you will notice, dang, the market is telling me exactly what it's trying to do. Look at this. We got to sell here. So the next time we get to that level, we should probably sell. And look what it did. Next time we get to that level again, we should probably sell. And look what it did again.
So 12 months ago, I went to a business conference here in New York, and they're giving out these free sample packs of AG1.
You see what I'm saying?
We're going to have to try those things out.
So start putting indicators on your chart.
So, you know, this is the concern about backtesting, or at least the warning that I want to give you when we go into backtesting. Price came here, cool, it sold off because, you know, you're looking in the past, it came there before, and that's where it fell down. Came here, sold off, came here, sold off, came here, sold off, and it's, you know, you just took sells, and oh yeah, you got 4 winners back to back or 3 winners back to back. This was a buy. This was another buy. You might have gotten a buy here, but maybe you might have gotten a buy. Like, you would have lost if this was a buy that you would have taken, depending on how you were looking at the market. So you can't form fit your back testing to go. You have to be brutally honest with yourself when you are back testing. Make sure you aren't seeing the data ahead of time. Make sure you're actually going candle by candle and making trading decisions based upon the candle as they play out. If for some reason unless you've actually dictated in your back testing strategy that you are going to take hard stops, hard take profits, unless you've actually done that and you play the candles too fast and you see what happens, you got to call it for what it is. If you are not having hard stops, but you're going to close, early whenever trades play out, but you missed it, well, chalk it up to life. Who knows? Maybe your internet went out. Maybe your kid just smeared peanut butter all over the kitchen table and you're out there helping your spouse clean it up. Maybe you missed it. You have no idea what life's going to throw at you. So be a little bit more harsh on back testing. That way, when you actually are in live testing, you're trying to try it out, um, it'll be a little bit more realistic because there's plenty of things that come up all throughout the day that you just don't think about. You had spicy Chinese food the other day, and it's really hitting you, and you put a trade on, but you ran to the bathroom, and it's like, oh no, I forgot my phone at my desk. It's like you're not gonna get up from that. Okay, so who knows? Don't form fit your back test to give you false hope. You want realistic results.
Start looking at it, and start being like, okay, does this do this? What happens when this does this? And eventually, you'll come up with a strategy that's going to at least be 85%. You know what I'm saying? 80 to 85%, I would say. If not 90, if not more. You know what I'm saying? Depending on your risk management. All right, so let me go to one of my
Okay, you
favorites.
threw in the caveat on the risk management. So 80 to 85%, if not more, if you came up with a strategy that's 80 to 85% win rate, like, oh my good gracious, that's beautiful. I'm pretty sure you're beating majority of hedge funds. I might have to look that up, but yeah, risk management is going to be, how you handle the trades. Do you cut? Are you able to get out of what you deem to be losers early enough that your win rates, yeah, your win rate's so high that you get out of a loser early enough that you don't even call it a full loss. So it doesn't even really count towards your win loss rate. Win rate can be misleading, but don't get so hung up on win rate. Get hung up on the process, and the process will dictate what your win rate is. So if your win rate's only 50%, if your win rate's only 50%, but you're able to pull 3% every month, don't get hung up trying to find that other 30% to bring your win rate up. You're making 3% a month. That's really, really good. Do not get caught up on these numbers. Look at reality. 3% a month, that's 36% for the end of the year. That's crazy. So if you can do that, don't get wrapped up in this, oh, well, I should be able to come up with an 85% win rate, or if not better. It's like, no, 50% is great. 40% can work for people. 30% can work for people. 10% can work for people. Don't get hung up on the win rate. You need to find out what strategy you're going to go with your risk management and your psychology. That'll dictate whether or not you're successful.
You see? All right. And then I'm going to add more indicators. Now, again, you don't need indicators. You can pretty much trade just with support and resistance or trend. I like using indicators. That's just something I've always enjoyed having. You know what I'm saying? Even with this, one thing I've noticed as well, I was playing around with the moving averages. And the same thing works with these, but I do like the 20 a little better. So I went to the 20 moving average. And I started noticing something. I said, every time this market goes away from this 20 moving average, it comes back.
Every time.
And at least gets close to it or touches it. And if you notice, it always happens. We got away from it, came right back. Got away from it, came right back. So I'm like, okay.
Yeah, that's true. So Forex pairs are really good at mean reversion. And that's basically what he's getting at here. Whether you're using the 20 EMA, the 10 EMA, 100, 200, price does that. It comes away, comes back, comes away, comes back. It's whether it's EMAs, Bollinger Bands, SMAs, they just tend to fluctuate that way. They move in waves. And so they're going to do that. Can you capitalize on that? Absolutely. Can you capitalize on the pull away? as well. Yeah, you could do them both. So yeah, I mean, he's talking about a bunch of different ways to get into the market, and that's what you need to find. You need to find one thing that you're like, I want to back test this concept and see if it works in the past. If it works in the past, I want to move forward with the future. Majority of your problem that you're going to get into is placing trades. You're going to your mind's going to want you to avoid losses, which is not part of this. You're going to take losses. It's going to happen. We're risk adverse. We don't want to lose. We're in a society where winning is all there is. And it's like, not for this, not for trading. For trading, it is managing your risk. It is managing your psychology. We are just managers of certain things. And so losing's not one of them. Managing losses is one of them, but we're going to be losing. So you just need to stick with one thing. Like he's shown 3 or 4 by now. Pick one and go with it. Don't try to encapsulate them all. And I've been with some traders who are like, I'm going to throw on an EMA. I'm going to use support and resistance, the stochastic, the RSI, and the Ichimoku cloud. And when they all align in the stars and the heavens also align, and the comet goes around Jupiter and we can see it on the constellations, then I will take a sell. And it's like, no, either it's going to keep you out of the market to begin with, or you're going to be getting so much conflicting stuff that you're going to get like this analysis paralysis. I think I've heard the term. So don't do that either.
Play. So now I know, hey, whenever we get far away, come right back. There's people say like, how you got so many different strategies? I'm like, look, I got so many different strategies because the market does the same thing. So if one strategy is not there, I can look for the other strategy. And that's the benefit of having multiple. You know what I'm saying? Now, again, you don't want, if it confuses you to have multiple, you definitely want to do that. But you want to get to the point where you can, swap in and out if need be, for every market condition. Every situation might be different. And as I'm scrolling back, so now I'm back testing, I'm looking all the way back to the market. I'm saying, man, this keeps happening. This keeps happening. Every time we get away, no matter where I look. We got away from the 20 here, came back. We got away from the 20 here, end up coming back. Now, like I said, it gets as close to it as possible, or sometimes it'll touch it. So now I know, even on Forex or binary options or whatever, hey, when we get away, we coming back. No matter what happens, we got away from it, we coming back. That gives you the confidence to hold your trades longer. You know what I'm saying? To set your, take profits. You take profits to your stop losses. The further I go back, you'll just be able to see it nonstop. Another thing you're gonna be able to see is the same rules apply with stochastic. Every time we get close to the 92 or at the 92, we get some type of sale. Right? We got close to the 92 or at the 92, we sold. You know what I'm saying? So this type of stuff is gonna help you, and that's why I'm able to continue to eat. Now the only thing you have to control at this point, now that you know what I'm telling you, is your emotions. Control your emotions. All right? Have a compound plan. Have a system in place to say, hey, I'm only gonna lose this much. This is how you become an amazing trader through backtesting. It's like, okay, I've also noticed that the market goes from one zone.
With the Amex Platinum card, you can earn 5 times membership rewards points.
To another zone.
Be some copyright.
This is a zone. Why? Because we rejected multiple times in the same area. In the same area, that's a zone. So if I buy here, I might take profits here at the next zone. This was actually
okay. See, this is what I'm concerned about backtesting. If he bought here, this is the next zone. You didn't know that was a zone until we'd already seen it happen. And he's getting ready to say, well, this might have been the next zone. But it's like, do you count all that as? Like, watch backtesting, watch curving your results for your backtest. It's a thing that we'll do. We want to curve our results to make it more profitable. But reality, the real live markets will own you.
Zone as well, kind of blew past that. So this could be a short, a quick little in and out, or if it take profit one here, take profit two. And you do that all the way down or all the way up, right? From one zone to the next. Another thing I added to my chart was another 200. Let's go back to here, boom. And then I'll click on settings and I'll go to 200. And I notice this controls the trend, right? So I'm gonna change the color on this one so it don't confuse you. There we go, boom, save. All right, so this blue one, 200. What did I notice about this 200? Hold on, let me back it out. I noticed that when the candles go above it or below, it starts to trend in that direction for a long time. Look how long it stayed above this 200. So yeah, you're getting dips, but as long as we don't cross the 200, we still gonna hold, right? And what gives me confidence to hold as well is when we get away from that 20. So I know we don't stay above because we gotta come back. All right, now the closer this 20 gets to the 200, that's when it's like, it might cross and then the trend might be over, but until then, we can hold confidently, especially when they go above both. When these two get tight, I notice when these two get tight, we have some sort of breakout. And then as soon as it crosses above, you hop in. Stop loss at the next zone below. Okay? You let the trade ride. And then again, as the trade progresses, you move your stop loss into profit. Now you're floating. Now you're rolling. As long as we stay above, eventually you would have got stopped out, but you would have profit. You would have been good. But if you didn't do a stop loss, you know, which I do recommend, if you didn't do one, some people don't, you would have still been in the trade and it would have been rolling. As long as we didn't cross this 200, you win a game. All right. So these are the things that I've noticed about the market, and this is how I'm constantly doing numbers. Again, look at this beautiful trade. And then sometimes you'll have multiple confirmations for more than one strategy. Overbought, oversold. Hey, what this tell you right here? Oh, we selling. What this tell you right here? We selling. How does this tell you we selling? We too far away from the 20. This told me we selling, and we far away from the 20. Confidently, biggest lot size of my lifetime, and I'm in there until we get as close to the 20 as possible, and I'm exiting. Simple as that, y'all. You feel me? So back.
Okay. Risk management. And I don't think that, I mean, maybe because you can have different trading strategies, as he's talked about. You can also have different risk management. So if you had a quick compounding account and you're like, you know what, I'm going to have this one account. I'm going to go heavy with a lot of different trades. Why? Because I want to grow this account quickly. And I know the likelihood of me blowing this account is very, very high, but the likelihood of doubling it is also very, very high. So it's in essence 50-50, but I think I can make myself a little bit, maybe 52-48. And that's really that little bit of edge is all you need. So he said when it gets up there, you get double confirmation, going really, really heavy with his lot size. Like that's a little concerning for somebody who's new and not practicing this. If you just saw this and you're like, oh yeah, let me put these on my chart. Oh look, it happened. I'm a double down, 50% of my account right here. You don't know, because you haven't back tested as well as forward tested, how often this happens for you to put in 50% of your account. Maybe every 4 out of 10 times this works really, really well. Okay, well, what if you just caught one of the 6 times it doesn't? Well, you just blew off half of your account on this one trade. Do you think that that's going to affect you when the next time it shows up? So this is where trading by itself is not hard. Risk management, trading psychology. Those are the 2 things that are going to get you. Because you need to know how often you're going to be right and how often you're going to be wrong. And if you're okay with both of those likelihoods, that you're comfortable enough to continuously place a trade, even if you got back-to-back wrong choices last time and you just lost. You need to know that you need to stay in the game. You also need to know that your risk allows you to stay in the game. You put 50% risk on every single trade, you're only going to be able to take like 2 trades and then you're pretty much done. Your account's blown. So this, I mean, one Forex trick, key to financial freedom, backtesting. I wouldn't say backtesting's the trick. It's not a trick. It's something that needs to happen. It's something that the part of the steps that you need to do in order to probably find success. I don't know very many people who've just continued or worked through with live testing and been successful. Are they out there? Yeah, probably. More of a unicorn than the norm. So I wouldn't use them as the example. So it looks like we're coming to an end on this. All in all, not bad. Don't like the thumbnail. It's too grabby. Makes you happy.